Taxes, right? They can feel like a never-ending chore. We work hard for our money, and then a big chunk goes straight to the government. It's like watching your hard-earned cash disappear. It's enough to make anyone grumpy. But here's the thing, understanding the tax system can actually save you money. Yes, you heard that right. One way to do that is by using something called tax write-offs. These are deductions that can lower your taxable income. Don't worry, it's not as scary as it sounds. In fact, it can be quite empowering once you get the hang of it. Think of tax write-offs as little loopholes, perfectly legal ways to reduce your taxable income. They can be your best friend during tax season. That means you pay less in taxes, and who doesn't love keeping more of their hard-earned cash? Imagine what you could do with those extra savings. So buckle up, because we're about to dive into the world of tax write-offs and how they can benefit you. It's a journey worth taking. It's time to fight back against those tax forms and claim what's rightfully yours. No more feeling overwhelmed or confused. By the end of this, you'll be a tax-savvy ninja, ready to tackle those deductions like a pro. You'll be equipped with the knowledge to make tax season a breeze. Alright, let's break down this tax write-off thing. It might sound complicated, but it's actually quite simple once you get the hang of it. In a nutshell, it's a legitimate expense you can deduct from your income on your tax return. This means that certain costs you incur for your business or work can help reduce the amount of income you have to pay taxes on. Imagine this. You spent money on something directly related to your work or business. It could be anything from office supplies to software subscriptions, or even travel expenses for a business trip. A new laptop maybe, or some fancy office supplies. These are all examples of expenses that can be written off. Instead of paying taxes on the full amount you earned, you get to subtract those expenses first. This means that your taxable income is reduced by the amount of these expenses. That lowers your taxable income, which means you pay less tax overall. It's like getting a discount on your tax bill. Think of it like a magic trick, but instead of pulling a rabbit out of a hat, you're pulling money back into your pocket. It's a clever way to save money and keep more of what you earn. And the best part? It's all perfectly legal. These tax write-offs are designed to help businesses and individuals manage their finances more effectively. Remember, we're talking about legitimate expenses here, not just random things you want to buy. It's important to keep good records and receipts to back up your claims. The IRS has rules, people. But don't worry, we'll get into the specifics soon enough. We'll guide you through what qualifies as a legitimate expense and how to make the most of your tax write-offs. So what kind of expenses can you actually write off? This is a common question that many business owners and individual taxpayers ask every year. Well, it depends on whether you're a business owner or an individual taxpayer. The rules can vary significantly, and it's important to understand the distinctions. Let's start with business expenses because those are often the juiciest. Business expenses can cover a wide range of costs that are essential for running your operations smoothly. If you run your own business, even a small one from your kitchen table, you can deduct things like office supplies, advertising costs, and other necessary expenses that keep your business running. Travel expenses related to your business, such as airfare, hotel stays, and even meals while you're on the road, can also be deducted. And don't forget about your home office. If you use a portion of your home for business, you can deduct a portion of your home internet bill if you use it for work. This can be a significant saving. Essentially, if you spend money specifically to earn income for your business, there's a good chance you can write it off. This includes everything from software subscriptions to professional services. But keep those receipts handy because the IRS loves documentation. Proper record keeping is crucial to ensure you can back up your claims. Now I know what you're thinking. John, I'm not exactly running a Fortune 500 company from my basement. But that's okay. Don't worry, even small expenses add up. Every little bit helps when it comes to reducing your taxable income. So make sure to take advantage of all the deductions you're entitled to. Section 5. Busting tax write-off myths. Don't fall for the traps. Now, before you go crazy writing off every single purchase you make, let's clear up some common misconceptions about tax write-offs. First of all, just because you can deduct something doesn't mean you should. You still need to be smart about your spending and make sure it makes financial sense for you. Secondly, writing off expenses doesn't mean you get all your money back. It simply reduces the amount of income you're taxed on. And lastly, please, for the love of all that is good in this world, don't try to make up expenses or inflate your deductions. The IRS is not messing around, and tax fraud is no joke. Stick to legitimate expenses and keep accurate records, and you'll be golden. Section 6. Play it safe. The importance of documentation. Speaking of accurate records, let's talk about documentation. The IRS loves documentation. It's like their love language. So, if you're going to claim a tax write-off, you need to be able to back it up with proof. That means keeping receipts for everything, and I mean everything. Keep track of your mileage for business trips. Take notes during business meetings. Basically, if it's related to a potential write-off, document it. Think of it this way. Would you rather spend a little extra time organizing your paperwork now, or risk getting audited by the IRS later? Yeah, I thought so. Tips for maximizing write-offs. Alright, now that you're a tax write-off expert, or at least on your way to becoming one, let's talk about how to maximize your deductions. One tip is to be organized and keep track of all your expenses throughout the year. Don't wait until tax season to start digging through a year's worth of receipts. Another tip is to familiarize yourself with all the eligible deductions in your tax bracket. The IRS website is actually a surprisingly helpful resource for this kind of stuff. And if you're really serious about saving money on your taxes, consider hiring a tax professional. They can help you identify deductions you might have missed and make sure you're taking advantage of all the tax breaks you're entitled to. Section 8. Embrace your inner finance guru. Knowledge is power. Listen, I get it. Taxes aren't exactly the most thrilling topic. But understanding how they work and how to use tax write-offs to your advantage is incredibly empowering. It's about taking control of your finances and making sure you're not paying more in taxes than you need to. Plus, when you see how much money you can save by utilizing these deductions, you'll be doing a happy dance all the way to the bank. And who doesn't love a good happy dance? So go forth, my tax-savvy friends. Spread the word about the power of tax write-offs and help your fellow taxpayers keep more money in their pockets. Take control of your finances, one deduction at a time. In the end, it's not just about saving money on taxes. It's about taking control of your financial well-being. By understanding tax write-offs and using them strategically, you're taking a proactive step towards financial freedom, and that, my friends, is something worth celebrating. Now go out there and conquer those tax forms.